Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, October 24th, 2019. And here are our top stories. We're going to be spending the day talking about ETFs or exchange traded funds. What are they and can they help your portfolio? And then we'll shift gears and talk about some of the recent trends with exchange traded funds and their performance. You've heard the term ETF or exchange traded fund, but what is an ETF and how do you get access to it? Well, joining me now from Direxion Investments is Senior Vice President Ryan Cvrkel. Ryan, so good to see you this morning.
Good to see you as well, Jeff. How are you?
Thanks. I'm doing well. I'm doing great. It's Thursday morning. It's been a good week. I'm excited, and we're talking ETFs. So thanks so much for joining us. What I would like to get for a baseline, because our audience is both institutional and individual, people may hear the term ETF, but they may not necessarily understand what it means and what is an exchange traded fund. So would you mind taking a shot at that?
Sure. I guess the easiest comparison would be to your standard mutual fund. And much like a mutual fund, an ETF allows the benefits of diversification across multiple equities or fixed income, what might be in the underlying of the product. But really the key differentiator here is, unlike a mutual fund, an ETF is going to trade all throughout the trading day. So rather than striking a price one time only, like a mutual fund at the end of the trading day, you can trade an ETF just like a stock. Additionally, ETFs are going to be mostly index-based. So they're tracking a preset list of equities or other securities. And there's some benefits that come with that as well, like transparency, tax efficiency. But, over the last, ever since the inception of the ETF, we've been seeing just a tremendous amount of growth within the industry. So I think a lot of people are favoring this structure over mutual funds for just a few of those benefits I just mentioned there.
Yeah, and just to your last point, I mean, there have been trillions and trillions of dollars. Well, let me back up. It looks like many investors are favoring passive or index investing, where you follow an index. The active managers maybe have not kept up with the fees that they add on, and so many people have pursued, both institutional and individual, have pursued passive investing, and that means typically using an index and not really taking an active approach. And I think because of that, you've got the two flavors, basically the exchange traded funds and the mutual funds. But ETFs in particular, I think, have seen trillions and trillions and trillions of dollars of growth.
Exactly. And, expenses certainly have it's a major reason why it's seen such growth. If you're looking at an actively managed mutual fund that's failing to beat its benchmark that it puts forth, it's a strong argument to go with an index product from the get-go. And, if we look at the persistency of folks that are able to beat their benchmark, it seems like it's a smaller and smaller group every time we see those metrics. So, I think just the ease of use of looking at an index-based product versus an active manager saves a lot of time in that actual search to find that manager. And more often than not, you're going to find that the index bests the performance of an active manager over time.
Yeah,
that's not to say there aren't active managers adding value, but far and wide, ETFs and index-based strategies have certainly proven their merit there.
Yeah, and I want to get to performance in our second segment. So hold that thought there. If I'm a retail investor, if I'm someone who is interested in purchasing an ETF, how would I go about doing that?
Really, any number of ways to go about it. You need to work through a broker, whether that be a broker dealer or a supermarket platform. But what we've just seen over the last couple of weeks here is actually that cost to establish a position has essentially gone to zero in the industry, with the likes of many of the supermarkets, E-Trade, Charles Schwab, et cetera, dropping their trading commissions down to zero. So from an end investor standpoint, when you're looking at a product with a very low expense ratio coupled with essentially no fee to establish a position, it's a pretty compelling it's a pretty compelling offer.
Yeah, absolutely. So you would go out and you do due diligence just like you do on a mutual fund, right? I mean, you looks like the lights went out a little bit in the office. That's okay. The lights did not go out on ETFs. The lights went out where Ryan is, but that's quite all right. We'll handle that. Adds a little bit of, it's almost Halloween. So, if I'm interested, I can go out and make a purchase, pay no commissions, but I still have to do the due diligence to understand what I'm investing in, right? So do they have prospectus like a mutual fund?
Exactly. So kind of that same prospectus, legal documentation that you might be used to on the mutual fund side, you're going to find the same thing on the ETF side. Okay. I would say one thing you're going to find with ETFs you might not find with mutual funds is that full transparency. So on a daily basis, you can essentially see each position the ETF is holding, which is unique relative to mutual funds. They're only going to disclose on a quarterly basis.
Right. Absolutely. Now, you mentioned that I can get, or someone who's interested can go trade on an E-Trade, a Schwab, a TD Ameritrade, et cetera. There are many other platforms I didn't mention. I'm not biased towards any one, just in particular. Just want to point that out. Today, can you get exchange-traded funds in a employer-based retirement plan?
So,
like a 401k?
That's a great question. And, it is not something that is widely available at current. And that's really because of the whole purchasing of ETF shares, how you would on the open market, like an individual stock. So it doesn't lend itself to that same ease of use that you would see with a mutual fund and that kind of monthly drip that we're used to with our 401k plans, et cetera. Now, that said, there are some ways to work around that. There's some mutual funds where the underlying is going to be ETFs. There's some SMAs out there that are using ETFs within the underlying. And those types of structures are available in those retirement platforms. So my best guess is that before too long, you're going to see ETFs make up a larger and larger portion of those qualified assets as, more ways are more or less become clear as to how to get those into those types of plans.
Yeah, I mean, I think I apologize for interrupting. I think there's certainly demand is there. I think that just because of the trading nature, most 401k plans, most mutual funds only trade once a day. I think the infrastructure, I can think of one, Charles Schwab, I think has a 401k ETF platform. There may be some others that I'm not remembering at this point. But I think there's definitely some things that mechanically and operationally probably need to happen in addition to the point about the SMAs. And SMA stands for?
It's going to be a separately managed account.
Right. So you need to be at a size where you can get a separately managed account. Or can it be collective? So can Plan A, Plan B, Plan C all participate in an SMA or like a CIT?
Well, typically SMAs are going to be for folks that want that very kind of customized portfolio, whether it be to meet specific tax needs or specific wants of that particular client. So I'd say more often than not, we're looking at some sort of pooled vehicle that's usually ETFs in the underlying that would be made available on that broader platform. So whether I'm trying to make the distinction between buying individual ETFs outright versus something where a manager essentially is taking care of that management through an overlay.
Sure. Now, Direxion Investments is an ETF product manufacturer. How do you sit down and determine what index or indices that you're going to follow? I mean, I'd love to hear a little bit about the decision-making product and whether you're going to follow the S&P, whether you're going to follow the FTSE, whether you're going to follow the 60% S&P, 40% FTSE. How do you determine what you're going to create?
Sure. So we're a bit unique in that our primary business is going to be leverage and inverse ETFs. So, we're working with all the major index providers. And really what it comes down to is we decide on, whether it's a sector or a geography or kind of a unique cut of the market that we'd like to package into a product, and then find the index provider that's going to be best suited to provide that exposure. So there's some index providers that have been historically better known for their international benchmarks versus others that are better known for the domestic benchmarks. So really it's trying to find what is the best fit for the product and then making sure that that index is available. Sometimes there are indexes that are already tied down by other product providers. But yeah, that's essentially the process we go about.
And then there's a lot of due diligence. I mean, you've got to understand the indices, who's producing it, the data. I mean, I'm imagining this is not something that you just whip up and say, hey, we have a brand new fund. Here we go. Right? I mean, this takes time to do.
Absolutely. And understanding that, again, our primary business is going to be leverage products. That due diligence process even takes it a step further because we need to look at the benchmark index and make sure that there's never been movements that would essentially cause it to be outside of its normal volatility in which a 3x or a 2x ETF would be suitable. So I'd say that we're even a little bit more unique than kind of your broad market, just single beta ETF providers in the sense of we need to make sure the index is going to be suitable for a leverage, a daily leverage component as well. So that's an additional layer.
Yeah, absolutely, additional layer. Ryan, I want you to hang around. When we come back, we're going to talk to Ryan about ETF trends and also some performance. So stick around right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Well, welcome back, everyone, and I hope you found the ETF either refresher or lesson in segment one very helpful. I know it was for me. But now we're going to shift gears a little bit and talk about some of the latest ETF trends and recent performance. And guess what? Ryan Cvrkel from Direxion Investments is still with us. Let's talk a little about, we kind of set it up in terms of exchange traded funds, what they are, what they, how they've grown in popularity, how they can continue to grow in popularity. Would you mind sharing some of the latest trends that you and your colleagues at Direxion are seeing?
Sure. I mean, on a year-to-date basis, what we're seeing in the ETF industry is continued growth. Inflows are right around 200 billion on a year-to-date basis, approximately. I'd say the most interesting thing that you see as you kind of decompose those flows is that the portion that fixed income is making up this year. So what we've seen is, fixed income products outpacing equity products, which is, if we look back 10 years ago, fixed income was just a very, very tiny fraction of the overall ETF marketplace, which was very much equity-based. So, it sends the message that a lot of investors have, potentially have taken some gains or are looking to get a little bit more defensive, on the heels of a lot of very strong market performance we've seen over the previous couple of years, or really since 2008, and the recovery that has been in place. So, first time we've been seeing fixed income outpace equity within the ETF landscape to this extent.
Is that a result of Federal Reserve and central bank policy raising rates, lowering rates? Is that why this particular flavor of ETFs would have more popularity now than in previous years?
I think you hit the nail on the head, and it's not just our own Federal Reserve Bank. It's really central banks across the globe that have been more or less easing. And as a result, we've seen interest rates globally move downwards, and fixed income essentially rally. So here we are year to date, just looking kind of broadly across performance, and we have equities up north of 20% here domestically. If you're looking at long duration fixed income, it's up kind of right in that same ballpark. And even if we look at commodities, specifically gold, positive in the year, which is pretty unique. Typically, you don't see those three up in the same year. So it's definitely been an interesting year.
Yeah, to say the least. And it looks like it's going to be even more interesting the remainder of the year for a lot of reasons with Brexit. We were just speaking to someone in the UK about the Brexit vote. That's potentially has an impact or will have an impact because we don't live just, we're not just impacted by what happens here domestically in the US. But let me ask you a question about people who hold ETFs. Do they typically hold them for longer periods of time relative to, say, a stock or, like a hedge fund or something where an accredited investor may be involved? Do they typically hold the ETF as part of their portfolio for longer periods? On average?
It really depends on the specific ETF. Now, I would make the distinction between kind of our core business here, Direxion, being the leverage and inverse ETFs. Those are types of products you don't want to hold on to for any extended period of time. They're really short-term trading vehicles. Now, if we look across towards some of the kind of broad market beta ETFs out there, something that's just tracking the S&P 500, for example, that's a great portfolio building block and something that can be bought, held really in perpetuity. So depending upon that specific investor's long-term goals, ETFs can take you right from starting out investing all the way for retirement. And there's a lot of products out there to kind of fill all those gaps for the portfolio. So I'd say, really there's products that are designed for every type of time horizon.
Yeah, I would imagine so. I mean, it's just like any other market's very evolved since they first began. As you mentioned, there's distressed products and they go full range. What other things, or time's running a bit short on this segment, but what other things are you all thinking about at Direxion, either in terms of fees, because I'm sure that like other managers, you faced fee compression, or the market, or just general products? What kind of things do you wrestle with that you can share internally as a team, as a group? Sure.
When you look at fees in general, the race to zero is very much alive. So when we look at kind of those broad market beta index-based products, that's a place we don't seek to compete, as that expense ratio tied to those products keeps going lower and lower. In some cases, it's zero. So what we do offer here, what we've been busy working on, is really thematic strategies. They're trying to capture kind of unique investment concepts that are going to be the drivers of market returns over the next, 3 to 5 years. So maybe something that's not going to be bought and held in perpetuity, but something that has a unique flavor. It's part of a growing piece of the overall market. Right now, we've been working on a pretty unique ESG offering. So something to take advantage of a big kind of societal shift towards more responsible investing. And we think we've got a pretty good mousetrap that we've come up with in that respect. So look for a new offering, sometime from part of 2020 from us within that space. But we're really looking for kind of those nuanced exposures. And I think thematic would be the best kind of moniker to put on where the majority of our product development efforts are going.
And do a lot of your investors and ETF investors in general, are they just individuals, or are they, for example, family offices, high net worth, pensions, endowments, sovereign wealth funds, other types of asset pools? Are they opportunistic when it comes to building a portfolio with an ETF?
Yeah, I would say our investor base really runs the gamut. Everything from mom and pop trading ETFs here to make maybe some returns on the side beyond what they're doing in their kind of buy and hold portfolio, all the way to institutions that are hedging around earnings season. So really, again, it depends upon the ETF. I'd say when it comes to the leverage sort, these are really designed for very sophisticated investors, and folks are watching the market on a daily basis, if not moment to moment. Whereas if you look at some of the more kind of basic broad market type ETF products, these are really great vehicles for anyone that has a long-term funding goal. So, I think really it's both sides. Again, it's a very diverse kind of structure that lends itself to both. So
yeah, you got to know where you're going before you figure out what you're going to build a portfolio with. Well, Ryan, I want to say thank you very much to you and Direxion Investments for your time this morning. I know you're a very busy person. Thank you so much for joining us, giving us an education on exchange traded funds and also kind of shaping what's going on in today and in the future. So thanks for joining us. Enjoy the rest of your week and have a great weekend.
Thank you, Jeff. It's been a pleasure.
And that wraps up this episode of BRN AM. Hey, have a financial topic or someone of interest that you think that we should interview? Drop us a line. And don't forget, for all the news related to retirement, the markets, technology, personal finance, so much more, check out today's edition of The Morning Pulse. So until tomorrow, and by the way, it's Friday, keep on saving and don't forget, roll with the changes.